All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for March 5th, 2024. Start with the hybrid swing workshop, hybrid swing portfolio. All right, so this is 30-minute charts, starting with Alcoa. This was yesterday's trade and an exit here. Today was a gap down to here, a harsh sell-off, a 1, 2, 3 entry, long, standard risk. Came up and touched the Bollinger Band mean. It rolled over. I took the exit at the edge of the dragon for 0.5 and no overnight risk. AI. So yesterday was the beginning of the second day of selling, actually second day of sell-off. Today was a gap down to here, continued to sell off, so we got short on a collapsing dragon, standard risk. It sold off during the day. And then in the last 30 minutes, started to curl up. I don't want any overnight risk on that one, so we earn about 2R plus 2 for 1 unit of risk. No overnight risk. That's going to be an important price level for support tomorrow at 30. If this holds, then this could be a very interesting reversal. If 30 cracks, then look out below and it could easily come back to 28, which is another minus 8% on AI. With all the buying pressure that was in here, there will be a considerable part of the population that looks at this as a buy on dip with a really strong value play. But that's what makes it a game. Caterpillar, yesterday's exit is feeling really good from the 2 positions long. We exited. Today was a gap down, started selling off again. Standard risk on the collapsing dragon when it gets below the Bollinger Band main. And it collapsed all the way into the close for about 1R. No overnight risk. Cliff Natural Resources. This was another day of selling. So that was yesterday's short side trade for 2R. Today was a big gap down. Got short here. And I gave it as much time and space as I could and stayed too long, and that got a scratch. And then I could not get in the zero state to play the rebound. So that was a lot of work for nothing. Bad form. I should have gotten something out of that. CVS, this has been in this long decay and tried to get some support yesterday. Today was a big run up, and then when everything started collapsing, this felt like a natural short when it crossed the VWAP here, and everything's rolling over. So that's short from here. Standard risk. It sold off harshly and then recovered. I exited the skin of the dragon for about 3, maybe 4R. The Dow was a very clear mover. So after the stable price action yesterday, big gap down and continued to sell off. So we're short from here. Standard risk. And that just was decisive. And then in the last half an hour, I stayed too long, exited here. On that much risk, we got 1, 2, 3R. and no overnight risk. This now becomes an interesting support level. If this holds, then the recovery feels good. If that breaks, look out below. This is the 10-day low around 383. Critical state in the Dow. Disney, we closed the long here when everything started selling for a fraction. Devon Energy, Emerging Dragon, entry, standard risk. It peaked here, came back to the dragon, exited for 2R. Emerging markets, collapsing dragon sell-off for 2R, standard exit at the edge of the dragon. ETHE, I can't get short that one because it's an exchange traded note, but if you were trading the currency, you had a windfall profit there. Mexico, 1, 2, 3 entry intraday for a fraction. Brazil, continuation short on the COTA 2 for 1R. No trade on China. I missed that short. It was there all day. Intel, big gap down. That makes this exit savvy. On the 2 positions yesterday, here's the gap down. There's the continued sell-off on a standard risk. Exiting at the skin of the dragon for 1, 2, 3. IP, COTA 2, scratch. Fractional loss, actually. IYR real estate. So this was the 3 position long that we had. We were exploiting that last run up. Exited today when it gapped up a little bit and started selling off and everything else felt vulnerable. Exited there, got short at the PSAR flip, standard risk, covered 1, 2R. That is very instructive. After that kind of extraordinary move, you know, you can only carry so much. Coke, COTA 2 short for a fraction. Regional banks, emerging dragon gap up, speculate in with the standard risk, and surprisingly, that was strong enough for 2R, no overnight risk. McDonald's, COTA 2, half an R, we'll take it. Merck was a COTA 2 continuation short for 2R. No sign of buying pressure on that at all. Microsoft, huge gap down. Very high volume sell-off continued, so we're short and exit at the skin of the dragon after the R10 reverses, 3R. Marijuana, big sell-off, 1, 2, 3 entry when it crosses the VWAP long with the standard risk to the PSAR, 1, 2, 3, 4R after it rolls over and we exit at the skin. Nike, emerging dragon correction, collapsing dragon continuation short for 1. Nvidia, no trade. Clean energy. So this was a collapsing dragon short. It reversed. I got caught for half an hour loss. It rolled over. I got short at the same level. This picked up 1.0. So the net was 0.5. Probably stayed too long, but I had a belief in the short side. Palantir, no trade. The short was definitely there. Rivian, still consolidating after that big earnings debacle. It probably needs to come off the tradable list. The S&P, much like the Dow, was a big gap down below the Bollinger Band mean, so pick up the short side like we talked about yesterday, and it was harsh selling all day. Treasuries, nice recovery and rebound. Tesla, big gap down, collapsing dragon short, managed to squeak out of there with an R and gave back 2. That's sloppy. Walmart, so completely against the grain, right? There was the 1, 2, 3 supported spring crossing kind of entry and 2 days of recovery to here, which we held overnight. We had a nice cushion of 1, 2, 3, 4R, and it gapped up to here and then rolled over, took the exit at the VWAP for an additional 4R. So that's a total of 8R in Walmart, buying strength on that dip and then respecting price and taking it when you can get it. Very proud of that trade. US Steel, no trade. I missed the COTA 2 continuation. And then XLI, this is the industrial sector. We got in just in time yesterday to put an end to all this nonsense. We took that exit yesterday. Today it gapped down and sold off, got below the Bollinger Band main. So we got short, standard risk for 2R. After the rebound, we gave 1 back. So that's +2 and no overnight risk. The counter trend intraday large volatility moves today were a godsend. Let's take a look at what was there. Let's see. We'll start with, this is the regional bank turbo. This is on 3-minute charts. There's your OR3. There's the crossing of the Bollinger Band mean. So I'm long with a standard risk. It held support and continued to go. So I get a second position on after I get about 3R in hand. It rolls up. There's your peak. Take the exit at the PSAR. So 1 on this one and 4 on that one. That's 5R in here. And then basically the same trade, 3 on this one, 1 on that one for 4R after the COTA 2 reentry, which held above the VWAP. Notice the power of the VWAP as a support level. It acts as a magnet, and when it holds support, crosses the Bollinger Band main, PSAR flips, you got to nail that. This is Walmart. In addition to that other swing, here was the close. Here was the gap up. It held above the VWAP, so speculated in. Standard risk. PSAR exit for 1, 2, 3. Breaks below the VWAP, holds, crosses the VWAP and the Bollinger Band mean again. So I like it. The strength of the trend is in when that support is in place, and that's also the standard risk box. 1 position was enough, +2 and +4, 6 in Walmart. Here's AI. This was the close. This was the gap down. That's the OR3. Here's the OR3 short. I let it come back to scratch. Everything was selling off hard by this time, so I'm not interested in the long at all. It comes back through the VWAP, through the dragon. It's hitting the PSAR. I'm short with the standard risk. I take the Bollinger Band mean exit for 1R. This is the lunchtime chop. This is a new low of the day. Try short, 1R. So that's 2R in AI, opportunity trading. This is Microsoft. This was a big gap down. There's the OR3. There's the short on the collapsing dragon, essentially. harsh PSAR exit on one position. No hurry. 4R, opportunity trade. Last one, this is IYR, the real estate. So at lunchtime, this thing had gone nowhere. There is your VWAP right in the middle. Here's your Bollinger Band mean. Here's the collapsing of the dragon. And there's enough of a gap there to clear it. So here's the short, standard risk, and all that does is just decay all day. And then after 3, coming towards the close, take the PSAR exit for 1, 2, 3 on real estate. No overnight risk on those shorts. None. I just got to say, here's the gap. There's your OR3. Where are we? This is collapsing dragon. If you get out here, then you have to get short again on a new low of the day. And you notice that. So focus. Reasonable effort, cut it quick. On that much of a sell-off, I probably would have gotten short there. This is a huge sell-off day at the end of an outrageously large swing move up from the last 40, 50, 90 days. I don't necessarily think this is just an easy stop and reversal in a large cap like Microsoft. Like my bias was down today, all day. I was looking to exploit the short side because of market conditions. So especially in DIA here, here's your gap down. Yeah, I get this as an entry a little bit late on the SSC. When that doesn't work, I'm probably out here. And I'm probably short right there and just staying that way and retrying. So still not bad, but I want you to really see these, that we should be able to get short in here. And I don't know that I like trying that. I get it, but it's when it crosses the VWAP, I got to get out. Like I was really primed today to exploit sudden sharp downward moves. That's what the risk Z has been telling us, and the slope of the regression lines has been priming us to be ready for these sharp one day minimum corrections. All right, here's Tesla. So I don't know how this is 1R. If that's if I guess you're short here. So that should be make that red and then make that green to cover. If this much is 1R, I don't know how this one, which is a win, is only 1R, because this looks to be twice the size of this. So I'm concerned about calibrating your risk like we talked about it. And then this one could go a little earlier here. When this rolls over, when you get this, and it doesn't even flip the PSAR, and the Bollinger Band is doing this, and the VWAP is going like that, as soon as that crosses, I can be here short as a COTA 2, then the collapsing dragon is a confirmation, but I love that exit. And I'd probably be trying the short here. because of this kata 2. And the collapsing dragon is right in there anyway. So I like that kata 2. Then after this much failure to fail further, that becomes a giant support level. And you've got the Bollinger Band mean is caught up to it. Then we might actually start thinking about this as a kata 2 to the VWAP. Just a pure tactical trade. But Tesla's got some big problems. Hamad, yeah, this is on a gap down like that. Okay, I get that 1, 2, 3, OR3, good cut. I don't know if I take the second one, then I got to get out of it when it crosses the VWAP, and then I'm short right there when it crosses the VWAP instead of here. I'd like to see you start to get that. And then I understand the second position and the quick cut. I like this one again. Again, when that does not fail and this reverses and comes up in here, that's still pretty good exit. Then after 2 chances of failure and it didn't, then the VWAP starts looking like a VWAP magnet. And maybe that long right there is excellent. Great exit. I like the short. I like the cut. I like the re-entry. I like all of this. I just think that there was maybe some, we might have improved in that area a little bit. And that second position didn't help us. Yeah, just nothing happening in Apple. And that's about 4 trades inside the chop. I don't know. There were things that were moving during this whole period of time. I want you to go take a look at IYR, Walmart, as a couple samples of things that are actually moving. The XLI was moving. EWZ was moving. This is not moving. We want to find those movers. Good work here. You know, that was moving. I'd rather see you concentrating on that one than hoping that Apple's going to work. Find the things that are actually moving. That's good work inside there. Not moving at all. Find the movers. Here's Kurt. This is on, what is this? Mexico. Yeah, I understand the quick exit to get, maybe to get paid, but I love the reentry. Then there's some kata 2s inside here that have some potential. I like this one because it held so long here and the last urge was up. There's a reason to believe that could work. So I like that. George, where's my reentry, man? After this kind of a move, and then I see that happening. I got to get on that. But you trim the losses. Re-entry possibility here. Yeah, you can enter on the same bar. In fact, the sooner that it starts resuming in the direction, like here's 2 choices. Like, so I decide to get short here. And instead of getting short, it starts recovering. So I exit. And now what if this thing just goes sideways and then buying or selling pressure comes in and I decide to get short right here. So this much time passed. what triggered it was failure for buying to come in. There was no more buying pressure. And this was a sign of weakness. And this time it was the potential for that move is why you got short here. That same potential is there. Plus you have the additional information that there was no buying pressure, none. So that means I can get short at the price level. It's the price level that's important. Now, I want you to compare that mentality to this one where I get short here, it doesn't work, so I exit, and then it immediately fails again. There was not only no buying pressure, the sellers came in and flattened that thing. So the sooner that thing collapses, the better. Sooner is better because the short sellers came in immediately to pound it south. That's actually a stronger signal than a bunch of sideways chop and then guys start tentatively getting short. There's no burning urgency or panic selling there. That's speculative. Over here, it's just a continuation of the previous sell-off. So yes, you can get short on the same bar right away, and then you get paid. And that's, remember, the last thing that happened was this. And then it rolled over, and then it's this. So this little burp that gets you out and it reverses right away, smash it south. There's the VWAP. This thing got, there was all kinds of additional selling pressure in there. So yeah, you can do it right away. Reasonable effort on the long side and a good cut at the VWAP. So I like that. Good management today. All right, we'll look at the charts today. So the 150 is still well oversold or overbought, excuse me. But this was the second day of selling and the range got larger. So now this is vulnerable. There's your PSAR. Tomorrow could be a significant day. And we're going to see on the 30 day that this was all directional movement today. It opened at the top of the range, sold off hard, and then there was a little bit of recovery here. But the net downward movement takes it to the PSAR, which temporarily held. If that cracks tomorrow, you got to be so short on that in terms of bias with the target of the Bollinger Band mean. It should make your head spin. And that's also a test of the last RL10. So if this does not hold, it's a second leg down. And then if it breaks below the 10-day low, it's under 500, the key price level, and that thing could be massively down tomorrow. You heard me talk earlier about why my stops were crucial right there for the longer term swing. And this was the against the primary trend, larger range volatility shock. And we've been calling that for a while, knowing that that's a potential. And so we got to be able to read the sensitivity of the market to that condition. And now it's sitting right on that PSAR. Tomorrow is absolutely crucial for the nature of this market. It is poised on a knife edge to either rebound strong to that's the all-time high. So a rebound there, you can't be surprised if it does that, but you also can't be surprised if it crashes through that and gets to the mean and the 10-day low. Both of those are equally likely, which makes this a zero state balancing on the head of a pin, ready to go large in either direction. That is the definition of a compound critical state. Whoops, let's go to the 30-minute. So just feel this price action. You know, we had that grind, big gap down, harsh sell-off all day, last minute recovery to here. This could very easily have collapsed even further down to here or down to there because it was testing that key support level and it happened to rebound from 504 to 507, which is 0.6%. But that support level is still right there, ready to collapse. And remember, the thing that got it up here was a big gap. So there's no support in here whatsoever. The next support is down here and around 494. So that could go fast. Just saying. Bullish normal. Here's the weakness of the last 2 days being starting to undercut the long-term strength. Here's where it finally came out of the overbought condition back to something like normal. And now it's sitting right on the edge of oversold. In fact, emerging markets have even given us a channeling rule. Notice that that these are not even above their 200-day. Only the large caps and mid caps and tech in the US plus the European 350 are that strong. Now they didn't pull back far enough to get channeling because it was just that 1% sell-off today, but another sell-off day and then those will be in prime time for channeling. So we got to be mindful of that. Volatility is poised on a knife edge, ready to support a sharp move in either direction. That's why the short-term trading is indicated now. Dow Tactical, Apple continues to suffer, as does Merck and United Health. Microsoft, a big loser. Tesla, a big loser on news. Intel, huge loser. Apple, a big loser. It's no coincidence that the whole market got burned today with all the tech leaders now leading the way south. What didn't? Oh, Devon Energy. That's a cyclic energy. And JP Morgan Finance, which can move out of phase with tech. You can have tech going down large and the money coming out of the sales rolling into finance, XLF and JP Morgan, that money abandoning ship to the next new temporary leader. And then who doesn't love Walmart? So that's part of the narrative for today, was cycling between sectors. In the ETFs, big up day in gold, all-time high. A few breakouts here on treasuries, defense, and regional banks. That's part of the whole XLF, KRE, JP Morgan line of effort on the finance. Oops. Yeah, auto framers starting to get a few more quality setups in here. Everything better than 2-to-1. Nike, I'm leery of Tesla with their news from today. But Brazil and Chevron, the energy could, Chevron didn't catch up like Devon Energy did. And at some point, Pfizer and Merck and United Health, that whole healthcare sector, may have a value play in there. Travelers is an interesting play because it has not yet caught up to the other financial leaders, and it's 2.6 to 1. So maybe there's a sympathetic value play in that one. Were there any squeezes today? Yeah, Travelers and Nike and 3M. 3M is a XLI component, so if we see any strength in XLI, 3M could be a sneaky play on that one. So, summer still dominating. A lot of things rolling over in the fall. Treasuries starting this anti-equity recovery, so winter and then starting into the spring. Today was a big gap up and cover on TLT, while the S&P was off 1%. So this is a case, I think, of the index players shuttling away from equities and towards treasuries, which have been on sale. The weakness in DIA was the real eye opener to me today. That was the strongest directional move. Easiest one to play as well. DIA, which had been formerly strong, was a minus 166 on the 2-day, and is now oversold on the 10-day. Some real weakness here in tech and the S&P itself. Defensive plays in finance right here. And the strongest thing in favor of Japan is it's not the US. That's a flight to quality right there. Finance, JP Morgan, Devon, Walmart, and even hamburgers on sale. This is as inevitable as death and taxes. There's the RL90. Here's the rollover happening. That's gonna, if that continues to fail, and the R10, remember, is still above the zero line. So that could be, we haven't seen the sharp sell-off yet. It just got to the edge of the river, and now it could test the bottom of the river, and that's where real fear would start to kick in. So that's a considerable move that can happen. Notice the move from here to there was the move from here to there. So we haven't even started the sell-off yet. So let's just remember where we are in the life cycle. It took 90 days for this thing to grind its way up. We had a little bit of topping action here for 3 days, and it's only, 1 to 1.5% off the all-time high. So with 2 selling days. So we could get 3 more selling days in a hurry to get it to the bottom of the river. That's a directional trade that I'm going to take intraday, no swings, no overnight swings on the short side, because I respect the primary trend. And the further this falls tactically, the more this looks like a buy on dip play. And all the way up the stack, buy on dip has been working. So my default position is, yeah, that's what it does after an extraordinary bull. But I can take advantage of intraday weakness to get paid with no overnight risk, and always ready to rejoin the primary trend. So you got to hold that zero state in your mind. Compound critical state, large moves in either direction. Got to be flexible. Don't even have to know why. You just got to follow price. Reward to risk and trade framing is key. Find the movers. All right, guys, that's everything for today. We'll get this published and processed.